Well, hello there, and welcome back to the Unfuck Your Biz podcast with Braden. Hello, I am your host, Braden. Super excited to have you here. On today's episode, I'm going to be chatting about why revenue doesn't matter. So, we all know revenue is sexy, but revenue really doesn't mean that much when we boil it down. Now, if you're not super familiar with all the lingo, revenue is basically business income, right? It's all the income you bring into your business. It's the top line number. So if I told you that I make $10,000 a month, what does that tell you? If any other business owner tells you they make $5,000 a month, $20,000 a month, $300,000 a year, what does that actually tell you about their business? Well, all it really should tell you is that they sell $10,000 worth of products or services in that month. Insert whatever number here. But we all have a habit of inferring a lot into that. Like people give us a number and we automatically just like think a lot of things that may or may not be true. So, for example, someone gives us a number and we automatically assume how busy that person must be. Oh, they must be so busy. They're making so much money. They're so busy. Or maybe we assume like they probably have employees for everything. They're not busy at all. We might also assume how much they are paying themselves and how comfortable they are. But do we really know any of that based on revenue? The answer is no. What's more telling is profit. So profit is the amount of money that we're making after our business expenses. So this is a conversation that I like to have because people talking about revenue is something that drives me bonkers. I listen to a lot of other podcasts where people like to share launch statistics or they like to talk about like their monthly or annual income. And they're always sharing revenue figures. And in the back of my mind, I'm thinking, okay, well, it's great that you made that much money, but if you are only operating at 20% profit because you have so many business expenses, that's not good. If you are spending $100 on ads to make $120, and that's like the only way that you're generating income, that's not real great either. I mean, that's like fine, I guess. You could just keep pumping money into the ads if you're always constantly making a profit, but that's not as lean as you would want to be, right? So we can't just look at revenue numbers. And in our business, we shouldn't really care about revenue all that much either. Instead, we need to focus on profit. So profit can come from our profit and loss. If you're not up to date on your bookkeeping, this will be a good kind of recap for you. So your profit and loss is a financial statement. Really, it's just a snapshot of profit profit and loss. We're not supposed to define a term with the term itself, but I think this one's pretty self-explanatory. So let me kind of run through the structure of what a profit and loss should look like. So first, you're going to have your revenue. That's the top number. This is all your business income. So we have revenue. If you are, let's say, a wedding photographer and you take 10 clients a year at $10,000, your revenue is $100,000. Pretty simple, right? And then below that, we have cost of goods. So our cost of goods will be the hard products that go into the thing that we're selling. If you operate a service-based business, you're probably not going to have any cost of goods. All right. So our revenue minus our cost of goods equals our gross profit. If you have no cost of goods, your revenue and your gross profit are the same number. Okay. So pretty straightforward. And then below that, we have all of our business expenses. So we have advertising expenses, we have office expenses, contractor expenses, and those all get added up to find our total expenses. And then we deduct that from our gross profit to find our net business income. And our net business income really is our profit. So again, if we had $100,000 in revenue and we have $50,000 in net business income, we're operating at 50% profit. So we have 50% profit, 50% expenses. Pretty simple math, right? What we need to know in our business is we need to know our revenue, we need to know our expenses, and we need to know our net business income. Ideally, we should know this on an annual basis and a monthly basis. If you don't know this information, you got to start doing your bookkeeping on a more routine basis. Net business income, so the amount that we have left over after our expenses and our cost of goods, should then inform how much we pay ourselves. And we can always work backwards too. We could say, I want to pay myself $2,000 a month. And then we can look at, well, how much revenue do we need to make if we intend to operate at a certain profit percentage? Or we can do it the opposite way. This is the amount of revenue I have, the amount of business expenses, and this is what I have left over. That's how much I should be able to pay myself on a monthly basis. But I found most business owners don't actually know this. They don't have it dialed in. I can give you some examples. In the past several weeks, I've done a lot of consultations. I've done 1-hour strategy sessions. I've done my tax in a day offer. If you want more info on that, feel free to reach out to me. But it's basically a 2 to 3 hour consultation where we dive into all the things. We look at profit, we look at expenses, how much you should be saving for taxes, all of this kind of information. And without fail, like a good number of people don't know these numbers because they're not up to date with their bookkeeping, which if we're thinking about it, makes sense because that's kind of what they're paying for help with. Like they don't have this all dialed in. That's why they're all paying to have me help them, right? With their bookkeeping, with their taxes. But we at least need to have a baseline figure. So even if your bookkeeping is not totally dialed in or buttoned up, you should be able to look at your bank account and just summarize, this is the amount of money I'm bringing in every month. This is the amount of money that's going out every month. That's your starting point. You also need to know this so you can cover your taxes. Like how much do you need to be saving for taxes? And then how much can you be paying yourself? I also want you to consider and think that you can't budget your personal finances if you don't know how much you can afford to pay yourself. And before all of my more seasoned business owners leave the podcast, this is going to be very relevant to you as well, because it kind of comes at different levels, right? So if you're a newer business owner or you're really disorganized with your finances, you like literally don't know how much money you can transfer to your personal bank account every month. That's like a real big issue. If you're a more seasoned business owner, maybe you know like, oh, generally I profit $4,000 a month, but if we really want to dial it in, how much can you be paying yourself? Should you be on a salary? Are you paying quarterly distributions? And how much of that money is going into retirement savings? So how much do you need to pay your personal expenses? How much do you need to pay any debts that you may have, student loans, credit card debts, and how much is left over to be contributing into a Roth IRA, a SEP IRA, so on and so forth. So if you're a more seasoned business owner, you have some of this dialed in. We want to think about those more advanced questions. If you're a newer business owner, let's not think about all that just yet and just think about, all right, how much money do I need to pay all my personal expenses? And can I afford to do that through my business? So how do we begin to do this? Well, I used to talk a lot about something I call the what the fuck happened to my money hamster wheel. And I will explain this. What this is people start a new business, right? And they really want to get this new expense, right? They want to sign up for a program. They want to buy a new camera. They want to do whatever. And they think, all right, well, as soon as I get my first client, I can do this. So you get a client and then you use the client money to buy the thing, right? And then there's another thing that comes along and you wait for your next client to buy that thing. And you are kind of accumulating your business expenses as you get clients. And sure, like hopefully within a few months, you're going to start making more money than you're spending, but you'll continue to allow your spending to grow and increase along with your income. Hopefully your income will grow at a slightly larger percentage. But what I see happen is people get to the point within a couple of years where they're at $50,000, $70,000 in revenue, but they're only operating at 50% profit. And they're thinking, I have all these clients, I'm so busy, but where is all my money going? Well, they're going to expenses that you've kind of let get out of control. And this is the WTF happened to my money hamster wheel. So we would focus on fixing this problem by looking at the expenses, cutting out expenses that you don't need, and then determining when you can bring on new expenses based on target profit goals. And this is something that I'm still focusing on, but what I've learned really in the past year, and this is something I already kind of knew, but just firsthand experiences, is that for most of us, it's a lot easier to make $1,000 than to cut $1,000 in expenses. Now, there's always fat you can trim right off the top. There's always money that we don't need to be spending that we can always cut. But once we get down to our essentials, it's going to be easier to upsell an existing client, to go find a new client, give a new offer, assuming that we already have a client base and a referral base, than it is going to be to cut those expenses. So what I'm trying to focus on now with my current students is let's trim our expenses from the beginning, but then we're going to set profit targets. And our goal is to hit those targets on a monthly basis, and if not on a monthly basis, on a quarterly basis. So what we can do is we can try to bake in consistency into our business. So we want to try to make consistent income month to month. But if we're down a little bit one month, if we're down maybe 2 months in a row, maybe we do a push at the end of that quarter to hit that revenue marker that we need to hit to get our profit goal. I know that's like a lot of information. It might be kind of swirling, but hang with me for a second. So several weeks ago, I talked about the 10K in 10 days challenge that I did after reading Rachel Rodgers' book, who I almost said Who Wants to Be a Millionaire? No. We Should All Be Millionaires is the title of the book. Check it out. Really, really great. But at the end of the book, she challenges everyone to do the 10K in 10 days challenge. I did that challenge. I think I ended up doing like 9,700 in my 10 days. So I was really, really close, but I was having a pretty down quarter. And that challenge brought me pretty close to the profit target that I wanted to be at for that quarter. So am I going to recommend that people do something similar every single quarter? Maybe not. But if you're a couple $1,000s shy and we're a few weeks away from the end of the quarter, maybe we do a push so that we get there and hit our profit targets. And if we do this on a quarterly basis, then by the end of the year, we're hopefully going to have a pretty profitable business, a pretty healthy revenue, pretty good net business income, and we're going to be able to pay ourselves the amount we've determined we should be. So if all this is kind of clicking for you and you're like, yes, Braden, I need some help with this. The first thing we have to do is start by dialing in your bookkeeping, because if you don't know your numbers, you're not going to be able to do any of this. In the past, I've talked a lot about bookkeeping just as a means of like, of getting your taxes in order, which we have to do it for that. But we also got to have our bookkeeping in order to make these kind of important financial decisions. So stay tuned. In the coming weeks, I'm going to have a lot of information for you on some different programs and offers that I'm doing to help you with these kind of things. Meanwhile, I'm going to plug in a little ad at the end of this podcast for what we have going on right now. But I hope this was all useful. If you want to chat about it, make sure to dive into my Facebook group, Braden's Besties. We can have a conversation about revenue, profit, all of these kind of targets and metrics that will be really fun. I'll see you over there in the meantime. And if I don't see you there, definitely, hopefully we'll see you. Or, you know, I say see you as a figure of speech, but we'll be back on the podcast next Thursday. So make sure you're subscribed so you automatically get the episode. It's going to be a good one. And that's all for today. Have a good one.